Moving on, stocks building on a week-long rally here. The S&P 500 closing higher after hitting its longest win streak since 2021. Here with the details is Yahoo Finance's Josh Schafer. Josh.
Yeah, Josh, so the S&P 500 notching that slight gain. We have been looking for that today to see if we get sort of that record for the most consecutive gains that we've seen for the S&P 500 in about two years here. Now, of course, the key question is what's been leading us higher and what's really been the market action. We've been looking for some of those stocks that didn't really participate in this 2023 rally to be rallying over the last week. So if you take a look at, say, the Russell 2000 over the last week, you'll see it got a big pop Wednesday through Friday, those small caps starting to take part in this rally over the last week. But then interestingly, you can see starting to fall off a little bit over the last couple of days. And then when you take a look just at the sector action that you see, when you take a look at technology, technology has been leading the sectors over the last week. It was the leader again today. And so some market strategists I've spoke with have sort of highlighted that, saying, you know, the 2023 story here has really been about market breadth, right? We've been waiting for more than just the Magnificent Seven to participate in this rally. Are these 3 days sort of bringing us back to normal? Keith Lerner over at Truist said, you know, we're kind of back to the same playbook. Liz Young over at SoFi told me we're sort of back in that same conundrum where you can make an argument for stocks higher through the end of the year. You could also make an argument for stocks lower until we see more participation. And of course, when we think about the Russell 2000 and participation there, a big part of that is really thinking about that higher for longer interest rates. Investors still not ready to pile into some of those stocks. And that's something we saw in some of the market action today with earnings, guys. Some of investors not really piling into some of these stocks that are just not showing profits right now.
And Josh, what could this mean for the health of the market rally?
Yeah, Josh. So I think when you take a look at sort of what we've seen from earnings thus far, and you look at what's happened to some of the losers. So I want to take a look at a graphic we have here on earnings and what's happened to companies that do not have or that have not produced positive EPS. So we're seeing the worst performance in about a decade for companies that do not produce positive EPS. You can see their companies falling over 5% in the 2 trading days. That's nearly double the 5-year average, according to FactSet. And you saw this today in some specific names when you take a look at Warner Brothers Discovery, Toast, Upstart Holdings, all of those companies down today as investors really start to price in and take a look closer at the fundamentals here. Callie Cox over at eToro telling me that investors aren't just praising every single stock out there right now in this rally. They're really honing in on the fundamentals and trying to understand what benefits and what doesn't have benefits in that higher rate environment. And I think that that's something you really have to keep an eye on here, because we know that markets have started to price in maybe no more Fed rate hikes, but where are we actually at with what the market believes and how higher for longer impacts these stocks? Again, when you look at what has been moving over the last couple of days, it does not seem like investors are ready to give up on waiting to see what higher for longer means, what sort of slowdown it brings in Q1, and how that sort of starts things out in 2024.